I'm going to freeze so that it's a freeze frame. Hey everybody, welcome to this Facebook Live, YouTube Live broadcast. Now please, before you scroll down below or go anywhere else, just hear me out for a minute of what this is about. If you're a small business owner, more than likely you're watching. Number two, if you're a small business owner, you got taxes to pay and you do not want to pay more than you have to. So for the next 30 minutes, 20 minutes, whatever I'm going to do, we're going to talk about last minute deductions before you file this year. I want to do a ton of Q&A here, so I'm here for you. This year, our accounting firm is going to do over 3,000 tax returns for small business owners around the country. I've got tips, I got strategies. Now I'm going to focus a little bit on the IRA, SEP, health savings account, 401k concept, because a lot of people are trying to put money into their IRA before April 15th, and they're wondering, what, is this going to save me or is it not? And so we're going to go there a little bit, but I want to talk about any other tips you might want to hit. I've had probably 3 phone calls today on just auto deductions, some dining, and again, the SEP and the IRA. So we're going to hit it all. Now, I'm a CPA, attorney, best-selling author, and I'm going to give away 2 books. If you stick it out with me here, I'm going to show you how to win either of these books. So I've got the Tax and Legal Playbook, Game-Changing Tax Strategies for Business Owners, and the Business Owner's Guide to Financial Freedom, both published by Entrepreneur. You guys rock. Ryan Shea, CEO, you're the man. Okay, now let's rock, and I've got a great Sharpie here. It's a good year. It's going to be a good broadcast. So here we go. All right. Now, if you're a small business owner, right before you file your tax return, option 1 is you can put some money into an IRA. Now, it's a deduction on the front page of your tax return, so whether you own a small business or not, you can put up right now, this year, up to $6,000. For last year, $55,000. So you might want to pull that off. If you're over age 50, you can have a $1,000 makeup provision. So I'm going to say this is $6,000 for 2019, but for last year's deduction, it's $5,500. Now that's option 1, and some of you might want to put that right on the front page of your tax return. Option 2, and I love this one. Now again, we can hit any topics you want for small business owners, so start typing your questions below. But let me just get these out, because these are still ones you can do now and get the write-off for 2018. So the second one is the health savings account. And I love these little babies. These are awesome. And you don't have to have a small business to do this one as well, and there's no income phase out. So if you had a high deductible healthcare plan last year in 2018, you can still take a tax write-off on your tax return for, I think it's $6,900 or $3,400 if you are single. I've got 2019 numbers in my head, which are now $7,500 or $7,000, but we're going to go $6,900 and or $3,450. I think that's where we're at for last year. And it's right there on your forms as you get filling it out. But this is a great write-off. Health savings account, it's like a supercharged IRA for healthcare. Put money in, get a tax write-off, go to the dentist, go to your eye doctor, go get acupuncture, boom, freaking write-off. So we love the health savings account. That's sweet. Now the third option, for those of you that are business owners that have made a lot of money last year and you're sweating bullets, one of the things to do is called the SEP. It's a self-employed pension plan. Self-employed pension plan. Now, here's how this works. In fact, I'm not even going to spell it out. We're going to go to another sheet here. What's nice about the self-employed pension plan is, let's say you're a sole proprietorship last year. You could even be an LLC or an S Corp. You could be any of those. And let's say you brought in 150 grand, you spent 50 grand on expenses, cell phone, travel, dining, home office, electronics, blah, 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 and then you net 100 grand. And you're sweating. You're like, oh, I don't want to pay too much in tax. Well, the SEP allows you to take a 25% deduction, put that 25 grand into a savings account right now before you file your tax return, get the write-off for last year, and then you're only taxed on $75,000. Also, you get the new 199A pass-through deduction, which is a big deal. So you get another 20% off, and we're saving taxes all the way to the bank. So this is a great thing, because once you have this SEP account, you can invest in real estate, you could buy Bitcoin, you could invest in a small business, you could give loans out, you can self-direct your own SEP. So this is pretty cool. So I really love this option if you're in the hole for last year. But it gets better. I'm going to throw an against you knife and a ShamWow towel. Here we go. Now here's where I've even got a YouTube video out there, SEP versus 401k. For this year in 2019, you do not want to get stuck with a SEP. If you're a small business owner making money online, selling a product, selling a service, contractor, flipping homes, whatever, the solo 401k is freaking amazing. Play like you're in a race. You're do a marathon. Maybe some of you are trying to get into marathon shape for the summer. You're getting ready. Wouldn't it be nice to have a 19,000 foot head start? Seriously, 19,000 feet head start. That's what a 401k is compared to a SEP. So check this out. If we did the same thing you did last year because you were in the hole, I can't go and get a 401k for last year. But if you do 100 grand net and we do a SEP, you get a $25,000 write-off. But you've got to pay self-employment tax on the entire 100 freaking grand, which is $15,000 in taxes. So I'm paying 15 grand in taxes before I get my $25,000 write-off. That's stupid. But if I could do an S Corp and then I drop it into a 401k rather than the SEP, so we'll put our little SEP bucket over here. Now what's cool is I can take a salary of maybe 40 grand, take a dividend of 60, I can put 19,000 in the 401k and 25% of my salary. So there I get, boom, boom, my W-2 goes down to 30, I drop another 10 in. Look at, I put 29 grand in my 401k compared to 25 grand in a SEP. And I only paid self-employment tax on 40 grand. So what that means is that I saved $4,000 in tax. Well, hold it, no. I saved $9,000 in taxes. So instead of paying 15, I only pay 6. So I saved $9,000 in taxes and I was able to put away 29. So some of your brains may be mush right now. They may be jelly. I want to take a few questions right now. But what's powerful about this is, as a small business owner, you can shove money out into these IRAs, health savings accounts, 401ks, or SEPs, and get a tax deduction, maybe even some of it for last year in 2018, but be more efficient for 2019. That's what I really want to emphasize. All right, questions?
Brian says he was just looking into this. Maybe give us some tips on how to start.
Okay, if you want to start a SEP, first of all, let's get more specifics for some of you that were looking for a write-off last year. If you file an extension in the next 6 weeks, you can actually take until September to fund your SEP. So you got plenty of time on the SEP. And all you have to do is walk down to the freaking bank and open up a SEP. Now, you may not like the products that they're selling in the SEP, so you can go to our office here. We've got a trust account where a trust company, I'm sorry. Whoa, there we go. It's probably bad on the microphone, but okay, you can go to a directedira.com, directedira.com, and set up a SEP, set up an HSA, or set up an IRA. And this is www.directedira.com, and you can set up an account that's self-directed. So you can invest it in what you want most. So, Brian, if you want to just go open up a simple SEP, an easy SEP account at a bank, you can do that. If you go to directedira.com, setup fees around $300 or $400. You now have access to the bank account for the self-directed account, so you can invest it in what you know best. That's option one. Now, if you're going to go down the 401k route, just give our law firm a call. Our law firm is kkOSlawyers.com. And we can get a 401k going, solo 401k. You control the checkbook. It's your 401k. You can start loaning it out to other business owners. So those are two good ways to get started. Now, I want to tell you, if you want either of these books, here's the catch. Just share this broadcast. Share it on your social media. Rosalie, my social media director, she's right here in the morning. She's going to raffle off and choose 2 people random. I'll sign them, send them to you with, whoa, that was professional. She's going to send them to you with no shipping cost or anything. So just share this and we're good to go. Okay, next question.
I'm not going to slaughter his name. We're going to call him Mr. Yu. He says, what are legal ways to minimize taxes?
Okay, Mr. Yu, you just said, what are legal ways to minimize taxes? I've written 4 books and I give 2-day workshops on that. Be a little more specific. Are you a small business owner or what? What do you mean minimize taxes of what? Give me a little more specific example, because I literally do give 2-day classes on that answer. What's the next question?
Brian says, this is Brian again, goes, if I'm already contributing to 401k Roth, can I still get the max tax deduction for fully funding an IRA?
Okay, so what's his name, Max? Brian, another Brian asks if he's already funding a 401k to its max at work, can you fund an IRA and get a tax deduction? No, but better yet, what you can do, Brian, is called the backdoor Roth IRA. So let's say here, where's our picture? Let's do this one right here. We'll pull this one back up. So let's say you fund a 401k out of your S Corp or maybe your day job. What you can do is fund an IRA over on the side, put your $5,500 in for last year or $6,000 this year if you want. And you say, well, Mark, why would I do that? I don't get a write-off. On day 2, you can convert it to a Roth IRA. So when you have that conversion, you didn't get a write-off anyway, so there's no tax per se. It's all after-tax dollars. We call it the backdoor Roth IRA. My partner, Matt Sorensen, he's classic for this. He funds the 401k, then on the day 2, he funds an IRA, doesn't get a write-off, but then he converts it to a Roth. So you've doubled down on your Roth. Boom! Is that sweet or what, Brian? Okay, question, Rosalie, from YouTube.
Okay, I got a question from My Opinion 46. He asked, do I file for S Corp when I file for my company in TurboTax, self-employed, or do I still need to file business separate from the S Corp through my own S Corp? I'm filing zero income at the moment.
Okay, all right. First name again?
He goes by My Opinion 46.
Okay, My Opinion 46 asked, Mark, I've got an S Corp, I've got a small business. Where in the heck do I put these on my tax returns? Now, for anybody watching right now, this is probably your most important point of the day. Seriously, if you're multitasking, listen up. The deadline for filing your LLCs and S Corps for last year is in 10 days. It is March 15th. The penalty, My Opinion 46, whatever, the penalty for not filing an extension by March 15th, which is in 10 days, is $195 per month or part thereof. So anybody out there listening that you have an S corporation, file an extension by 10 days from now. Call my office. I'll get my phone number again here if you need to. Get online, whatever. File an extension. Very, very important. Now, if you have an LLC, people, and you're 100% owner, you have until April 15th to file an extension. An LLC is reported on your individual. So let's go through an example of this. This is good for everybody. So let's say you have a small business on the side, and let's say it's in an LLC. And let's say also you have an S corporation, and you've got your 1040. So you've got 3 things going on. You've got your personal return. So in that example, any small business or LLC is reported on a Schedule C off to the side, and it goes into your 1040. You can do this all by April 15th or file an extension. No big deal. But if you have an S Corp or a 2-member LLC where there's more than one owner, this is called a 1065. This is called an 1120S. Both of these are due. And I'm going to get serious right now. We're going to throw down a new color. These are due by March 15th. That is in freaking 10 days. So people, get serious. You can get a hold of my contact information down below. Next question. Go ahead.
This comes from Daniel Conan. Do all CPAs in your company know as much as you? I have a small business and would like a CPA to take over payroll taxes, 401k.
Oh, okay, this is Dan, you said?
Yep.
Dan says, Mark, is everybody in your firm as smart as you? Hell no. I'm just joking. I actually have to say, my team is amazing. We've got probably about 45 employees on the accounting firm and about 25 employees in the law firm. And I wouldn't be where I'm at today if it wasn't for my amazing team. My accounting partners are way smarter than me, but they hate to get in front of a camera. They're your typical accountant that is a genius, but they let me do the blah, blah, blah. But our whole team is up to speed on all my strategies. They are sick of hearing my strategies. We do training meetings all the time. So if any of you want to work, this is not an infomercial. So anybody watching, I'll leave it at this. If you do need some accounting or legal support for your 401ks, your directed IRAs, your accounting, blah, 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 give us a call. We'd love to be of service, and my team's amazing. So don't feel like you have to work with me. Rosalie.
Okay, David asked on YouTube, is it a good idea to start a business without a business plan?
Oh, David says on YouTube, is it good to start a business without a business plan? No, it is not a good idea. You're killing me. Okay, do you know what one of the and I've got this is a plug, I'm sorry, I'm gonna say it. I've got a new workbook, just came out 6 months ago, titled 8 Steps to Start Your Small Business. You will freaking love it. It's on Amazon, 99 bucks, whatever. But here's the thing. One of the big things I teach in there is how to build your business plan, your strat plan, and your marketing plan. 3 plans. And in fact, I'm gonna take 2 seconds. This is good for everybody, all of you out there that are small business owners. I've got 3 plans that I teach. This is your business plan, and then the marketing plan, and the strat plan. Now, here's the point. A business plan is a one-time event. And I help clients all around the country set up their business plan. It's a one-time deal. Do you know what the biggest benefit of doing your business plan is? To see if your plan is a good idea. Sometimes the business plan can save 3 years of your life and 100 grand. A marriage, a lost family member. I mean, do you know how many people I meet with that are like, Mark, if I just would have done a business plan 5 years ago, I wouldn't have wasted the last 5 years. Do a business plan. Get over to my little workbook. It's on Amazon, Mark Kohler 8 Steps. It's awesome. But once you do your business plan, people, and you're like, hey, this is a viable idea. I'm gonna sell tacos in a van down by Walmart. Cool. Then you have a marketing plan and a strat plan that you carry around with you everywhere. Mine's literally on my desk. I take it home at night, and the strat plan and marketing plan evolve and go as your business grows. So get out there, everybody. Work on your strat plan and marketing plan. I've got videos on YouTube on those 2 topics. Nancy.
Tina's one of your top fans, and she's jumping back a little bit. She says, if my primary income is not from my LLC, but I have enough income that I want to reduce or eliminate taxes, would I be able to do this?
Okay, so first name again?
Tina.
Tina. When everybody gives me a question, I always forget the first name for some reason. I'm thinking of your question. So Tina says she's got a day job, she's got a W-2, and she wants to save taxes. Okay. One of the #1 ways, Mr. You, if you're still watching, one of the biggest ways to save taxes is to have a small business on the side. Now, the reason why is because you have all these personal expenses out there. So let's say here's your 1040, Tina, and you've got a W-2. And you're making money. That's cool. Well, down here in this corner is called the AGI, Adjusted Gross Income. And what happens is millions of Americans go take their day job and then pay for crap below the line. This is called the line. When they talk about above the line, below the line, this is it. And people pay for stuff like cell phone, a computer, internet, a laptop. All of this stuff is down below the line. Well, if you have a small business, I can move these above the line. Now you have to have income. Tina, you gotta have a business idea. Start selling crap on eBay, jeans on Craigslist. I don't care. Start a small business. Then I can write off your cell phone, your kid's cell phone, your husband's cell phone, something. Now you're making money that's initially tax-free, because these are called personal conversion expenses. It's crap you're gonna pay for anyway, but now I'm deducting it above the line. See what I'm saying, Tina? Okay, next.
Jose must have heard about directed IRA, because he says, what's the high-level process to move IRAs to a self-directed IRA and then invest into real estate?
Woo! What's his first name?
Jose.
Jose asks an awesome question. Now, everybody, I've had people email me and go, Mark, you blew my mind. I had a guy today on a phone call say, Mark, I didn't even know you could do that. Let's say you have an old 401k or an old IRA. Or, okay, cool, that's first option. So you have an old 401k or an old IRA. It may be sitting at Merrill Lynch, Oppenheimer, Edward Jones, American Funds, blah, blah, who knows. You can move it by simply opening up a self-directed account. There's no penalties, no taxes. You just move the money, and so you go over to a new custodian, and we love, and we are all behind, we help work with them every day, is Directed IRA. I'm one of their chief financial officers. Directed IRA, directedira.com. You go over and open up an account, and then you transfer the money. This is on day 1. On day 2, they call you up and go, where do you want to invest, Dan? What do you want to do? So now your money is in a new IRA where you control it. You can loan money to other small businesses. You could even form an LLC and buy a piece of real estate. And this is what we do at our law firm. We help directed IRA by setting up LLCs for clients. Now here's what's cool. You can fund a new IRA. You can fund a new 401k. So anybody, if you're in that boat where you're like, man, I want to start getting write-offs to invest tax-free, that's self-directing. And you can start buying real estate right away. Get over to my YouTube channel and just type Mark Kohler Self-Direct or Mark Kohler IRA. You're going to see some sweet videos. Mallory.
Paul Goldfriend, if you max Cole's 401k and Roth from your day job, are there other options for saving taxes on an LLC income?
So Paul says he's maxing out his day job IRA 401k, and then this kind of goes to Tina's question too. If you can start a small business on the side, so let's say we start this little small business, you're going to take these personal conversion expenses that you never really got a write-off for anyway, and we're going to write them off in your business. Now the first year or two, you might have a loss, and that loss can reduce your W-2, which increases your refund. But you can't have a loss every year. It's called a hobby loss rule. So you can lose money the first year or two, but then after that, you better show a profit or you're screwed, and then we just got to stop taking the write-offs. So initially, Paul, Tina, you can take write-offs that are negative inside a small business, but what's the whole goal of the small business? I don't want you to just lose money. I want you to make money, and make money as much as tax-free as possible. So let's keep our eye on the ball. Now here's another strategy in this, is you can have your day job with the W-2, you can have a small business over here, but where it gets good is buying rental property. Rental property can grow tax-free, create cash flow tax-free, and create write-offs through what's called depreciation, and the depreciation can help offset your W-2. So that's a great idea, Dan. If you want to start looking at rental real estate, again, look at some of my articles and my videos on that. A lot of my wealthy clients save taxes through real estate. Okay, a couple more questions.
I was going to send Tim a copy of your book, because first he said, what's the minimum amount you have to make to be a business? But then he says, regarding being able to write stuff off.
Okay, so Tim says, what is the minimum amount you have to make to take write-offs and start a business? Let's do an example here. Everybody focus for just a minute if you've been kind of running around here. Let's say you are opening up a lemonade stand. You're going to go out here on the street, you're going to open up a lemonade stand, and you start buying sugar and ice and cups and everything, and you're out there ready to roll. And are you in business yet? No, you are just in startup mode. Until you sell that first cup of lemonade, you're just in startup mode. Now, some of you watching right now are in startup mode, but you can start capturing tax write-offs right now. And so I want you to track your mileage and your cell phone and your computer and start setting up a little set of books so we can say, okay, you're in startup mode, but once you sell that lemonade, I can start taking write-offs. So let's say in this little business, you sell $1,000 worth of lemonade, but you have $5,000 in expenses. You went to Country Time Lemonade School or something, and you have a $4,000 loss. Well, that loss will offset your W-2, reduce your AGI, and save you taxes. Now, in the first year or two, that's okay, but we want this to start showing a profit. Then what you're doing is you're taking write-offs for other expenses and reducing how much of your income is taxed. I know this is deep, but what you're doing is increasing your income, but your tax is actually not increasing proportionally. So you're getting an effective lower tax rate. Anyway, that's our plan. So are we at about 30 minutes? Are we rocking? Okay, 2 more questions. We're going to be done. Yes, Mallory.
The 199A deduction from trust. That's it twice.
From trust?
Valentino, yes, from a trust.
Okay, Valentino asked, can I get the 199A deduction from a trust? It depends on what type of trust you have, Valentino. If you have an irrevocable trust, that trust is its own entity, and it's going to pay taxes at trust rates. So it's going to be treated more like a C corporation. So no to the 199A in an irrevocable taxable trust. But if you have a revocable living trust, which is essentially flow through, then you would get the 199A. I don't see a problem there. Okay, one last question.
Steve says, hi, are vacation home rentals tax benefits the same as traditional rentals.
Oh my gosh, I love this. And what's his first name? Steve says, is a VRBO, Airbnb, short-term rental, vacation rental, the same benefits as a long-term? And I got another sheet, I think we're okay. Let me say this, yes, VRBOs and Airbnbs freaking rock. You're gonna get the same depreciation, you're gonna get better cash flow with an Airbnb and VRBO, and you probably won't have as many losses. A lot of my clients with short-term rentals are seeing gains, and you get the 199A 20% deduction on a vacation rental, so it even gets better. Now, you've got to be careful with these vacation rentals. I've had clients get into a saturated market and they don't get the rents they thought. And then they convert it back to a long-term rental, which sometimes can be even more available in an area. Think of Seattle. A VRBO could rock in Seattle as long as you're not saturated in Bellevue with a bunch of other VRBOs. But if you turn it into a long-term rental, those rentals are hard to come by, you might get even a better rental rate. So you have to look at your market, but that's an investment decision. Now, last question.
You have 5 more minutes.
I have 5 more minutes? Oh my gosh, I hope you guys are loving this. I'm a geek, I love this crap. All right.
Brian, our favorite Brian says, is it better to fully fund my employer's 401k or a 401 Roth if I'm planning on opening an IRA to max before filing?
Okay, Brian says, is it better to fund my 401k or to fund a little Roth on the side? Brian, I think the best answer is both. Do both, you can. That's called the backdoor IRA that I was talking about earlier. So people, if you have a day job, now I'll say this, I might need more paper after all, we'll see. Okay, if some of you people, this is deep, if you guys are cool with this. Let's say you've got a day job and you have a small business. Let's say you're doing a small business on the side. So you have an S Corp over here and you've got a 401k at work. Well, you can also have a 401k in your own business. You can have both. And you can have an IRA, a Roth IRA individually. This is deep, this is crazy. This is how the rich get richer. This is why they pay me the big bucks. So what you can do is I would go, Brian, to the work and say, how much do they match? Well, they match up to 3% of my salary. So say, oh, okay, well my salary, let's say they match the first 10 grand. So get in and play in their 401k and get the $10,000 match and then get out. So you double your money with the match. Then you go into your own business, set up your own 401k. We do this all the time, $9.99 to set up your own solo 401k. Then you do your other $9,000 and you match yourself. So you're getting 2 matches. You can have 2 401ks, people. So now what Brian's done is he's maxed out his 401k and he goes, well, now I can't do a Roth IRA because I matched out my 2 401ks. No, you do the backdoor Roth IRA by making a non-deductible contribution to a traditional, and on the second day, we turn it into a Roth. Read my articles on backdoor Roth IRAs. It's amazing. Brian, you can dip into the bucket 3 times. Boom. Okay.
Last question. Quentin Mason, how much will it take for your company to do my taxes this year?
Okay. Quentin says, Mark, how much does your firm charge to do tax prep? First of all, anybody listening, in fact, if you go to any new CPA this year at this time, they're probably going to file an extension, and that's okay. You know, 60% of our clients file extensions, and you actually reduce your chances of an audit with an extension. I file my taxes October 15th every year, last one. But the point is, don't stress about an extension. That's first and foremost, whether you come to my firm or go anywhere else. If you use our firm, we're around $500 to $600 for a personal return and around $1,000 for a business return. Now that's actually pretty competitive. You get in bigger urban markets, it could be twice that. But again, I don't know, I need to know what you've got going on. Some of you, Quentin, I might tell you, 2018, go knock it out on turbo. But this year, you've got a small business, you've got a rental property, graduate. But start following. Guys, let me just say this. Subscribe to my channel on YouTube. Hit the little bell. I shoot videos every week. Also, give this video a thumbs up. I totally appreciate it. And hit the bell, like I said, so that you get new videos. And here's the thing. I've got a newsletter that's free every week. Been doing it for 10 years. Last night, I was at home working on my newsletter. We hit send this morning. So get over to markjkohler.com. And I don't know, I'll write it up here. markjkohler.com. And if you go over there, markjkohler.com, my newsletter is free. I have a free ebook. And When you click to subscribe to my newsletter, it's every week. It's always been free. There's tax tips, blogs, and articles. So that'll help you out too, Quentin. Because even if you don't use my firm as an accounting firm, that's cool. Get my tips. Milk it, man. It'll be worth it. Now, if you share this, you're in for the drawing. Tomorrow morning, we'll be giving away the books. And again, every Thursday, I'm doing a Facebook, YouTube Live. Look for me next week. And if you want a specific topic, email me, text me, social media, boom, we'll do it. I'm out of here. I'm dropping the pen. There we go.